So I'm Carsten Haubner. I'm the fund manager for the KGAL ESPF 5 Renewable Energies Fund. We are focusing on renewable energy investments in the European markets. I think this is a twofold kind of story. On the one hand side, if you're an owner of an operational asset and you see power prices going up and you have an uncontracted share of revenues, you may be able to earn some windfall profits. On the other hand, by doing so, as you may remember, European renewables markets is rather regulated. This may trigger regulatory actions in single markets. For assets which are non-operational at present, I think the effect is rather limited because we see a counterbalancing trend between rising energy prices, so rising revenue streams into the asset, and also rising capex requirements to construct the asset. So there's a kind of a counterbalancing tendency in the market. I think it pretty much depends on the attitude of the investor. There are investors in the market and increasingly coming into the market who like to play it more actively, taking on the risk and then surf the spot curve. On the other hand, if you're a more traditional investor, more conservatively orientated, you have an interest in contracting out basically your energy production, either in private markets or under feed-in regimes where available. So you have plenty of opportunities as the PPA market vitalizes in Europe to contract out in different kind of contractual setups in different terms, and this helps you to secure, basically, to take this volatility out of your project cash flows. We see more volatility in the market, and we see more and more market participants coming into the market who like to play on this volatility. So especially from the oil and gas sector, just to name one example, we see companies coming in being much more familiarized with this kind of volatility and play it more active. On the other hand, the overall market, I think you still have possibilities to participate in it based on more conservative approaches with more stable calculation basis for your projects, for your investments. So it's a little bit depending on the nature and the risk appetite of the investor, if you want to play it more in the speculative world or if you want to stay a little bit more in the old turfs. I think we see a development into two buckets. On the one hand side is those investors who are taking on more risk, especially when it comes to route to market and how they sell off their energy produced. They are more willing to accept price volatility because they probably are a little bit more used to it, or they have a different kind of portfolio approach if you compare to the traditional historic renewable energy investor who was more income focused, more conservative, looking for stable, reliable cash flow structures in the assets. And we see clearly that the market deviates into these two corners. On the one hand side, the higher risk, higher return guys, and on the other hand, conservative investors still looking for a certain level of return, but under low risk profile. And I think the market can serve both baskets depending on how you approach renewable investing in the market.